Hi, my name is Dayton Deal, and today we are going to be talking about the stock market and why you should be investing in it today. You should be investing in the stock market as young as possible. As more time grows, your money will grow with time. And yes, the stock market is a scary thing, and a lot of people don't invest because of that reason, but you can play it safe and low risk, low reward. Over time, you will make a good profit for yourself, and that is why you should be investing in the stock market today. Imagine if your money was compounding, getting bigger and growing for you while you were asleep. That is the benefit of investing in the stock market. The stock market will always be growing your money or shorting your money. But in the long run, it will grow your money and you don't have to do a thing other than invest. I'm gonna be explaining what the stock market is. The stock market is a tool that has been used for decades and decades. And it's basically when you buy fractional shares or shares into a company. So for example, like Apple, Microsoft, or Amazon, if you wanted to buy a share of their company, you need to buy what the cost of the share is per share. So a stock will say $100 per share, which means that if you put $100 in, you get one share of that company. Some will have $20 a share. So you put $100 into a $20 per share company, you will get 5 shares. The more shares you have of a company, the more money you will make over time. You might be a little scared of starting and maybe not know how to start. But in today's world, investing in the stock market is one of the easiest things you can do. It's as simple as downloading an app like Robinhood, Fidelity, Charles Schwab, and just starting and making an account. You will have to link your bank account if you do want to start investing, but it's super simple, and I definitely recommend it if you want to get started. I recommend using Robinhood. That's what I personally use, and I think it's a great way to start. Just if you have a couple bucks left over after a paycheck or you get some money, it's a great way to just start investing in the stock market. It's super easy. And instead of having to call into Wall Street and putting in your shares, you can do it immediately as soon as the market opens as a click of a button on your phone. The earlier you start investing in the stock market, the better. As historically, the stock market has had a profitable revenue of 7 to 10%, which is really good, beating out some saving accounts that banks offer. So the stock market is a great way to increase your money than doing the safe traditional way of putting it into a savings account. If you're smart with it, you can really use this tool to help you for your future. When being an investor, there's kind of 2 ways you can be. You can either be a high risk, high reward, or a low risk, low reward. I typically, if you're not comfortable and not know what you're doing, I'd say you want to start off being a low risk, low reward kind of person. This way, if you have the market crash, you're not screwed. If the market crashes and you're a low risk, low reward, you might lose a couple dollars here and a couple dollars there. But if you were a high risk, high reward kind of person, you might lose out on a lot of money. So to begin, I think you should do a low risk, low reward. High risk, high reward investors usually want to make money in a small amount of time and a lot of it. Usually this means buying shares in 1 or 2 individual companies and just loading all your shares into that one company. It also means day trading crypto, which practically moves and can go up and down no matter what. It doesn't really have a backing, and sometimes it can go really high or sometimes it can go really low. As long as the high risk, high reward people make money, they are okay with that. You kind of have to be a little bit of an expert to read the charts and understand how it's gonna work. So if you're a beginner, I definitely don't recommend this, but as time goes on, you might start seeing fluctuations in the market and might start predicting it, and it might work out to your benefit. If you want to be a safer, low risk, low reward kind of investor and you really want to put this money in for your future, I definitely recommend investing into S&P 500s, ETFs, anything that is a market share of the entire market. An ETF basically is 500 of the best companies in the market. So your Apples, your Amazons, your Nvidias, the ones that are the big names, and it takes all 500 of those shares and makes one stock out of it. And usually these stocks do really well over time. They grow slowly, yes, but again, low risk, low reward. Over time, your money will grow very slowly, but highly. So 30 to 40 years down the line, $20 might be $1,000. So the more money you put into it over time, it will do very good. Before investing in the stock market, I think you should ask yourself what kind of investor you want to be. If you go in there thinking that you're gonna make a lot of money in a short amount of time, I'm sorry, but you maybe have a 5% chance of actually doing that. I know when I first started getting in the stock market, I thought I was gonna be the next Warren Buffett. And now I'm looking at it and I'm like, I was nowhere near that. So I definitely think before you start this journey to helping yourself in the future, I think you should really think about what kind of investor you want to be, where that might be investing in some ETFs just for safety and letting it grow over time for your retirement. And then while that goes on, you're investing in that, maybe you start investing into individual companies that you feel will do well, but not totally putting your entire bank account onto one stock and having diversifying. Diversifying really does help you in the long run and gives you a whole more dividends and stock options than what just one company will offer you. The stock market is a great tool to use to make money fast, but usually I like to use it, and a lot of people like to use it for just your retirement and future investing. Investing in the stock market has a lot of benefits for the future. Investing in a 401k or an IRA means that your money won't be taxed. So when you go to pull it out, whenever you decide to retire, the government won't take their share of your money. This money is only for you, and when you pull it out, it all goes to yourself, which is a great way to not pay taxes and also have a good set of money for your retirement. If you do start investing in the stock market now, later in life, you're gonna be very happy you did. Later in life, when you're old and you still are working, you don't need to do that anymore if you had that money investing for yourself. When you're old and you want to retire, you want to have financial freedom. You want to go on vacations and go eat whatever you want. You want to be able to buy a house and build a family there. And with the stock market, that is a great way over time to help set yourself up for the future and your family if that you want to do that. Another great thing about investing in the stock market is that the stock market will usually beat inflation. Usually, if you have money in your bank account and it stays stagnant, inflation will make that money go down in value and you will lose value on the money you have in your bank account. That's just stagnant. But if you were to invest that money into the stock market will keep up with the inflation and maybe even beat it. And right now we are in the highest inflation it has been in a lot of years. So it's a good idea to start investing now so that your money beats inflation. These were just some reasons why you should invest in the stock market at a young age. And yes, it can be scary when you're young, but something scarier is working into your 60s, 70s, and maybe even 80s. You don't want that. You don't want to be that old working. At that age, you want to be living your life, pursuing your passions, going on vacations, and investing now, which might be a hassle, will really help you in the end when you want to retire. And that is why you should be investing in the stock market. Thank you for listening to my speech, and I hope you all enjoyed.
Yay!
All right, there we go.